Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Friday, April 11th, 2025. This is Nelson John. Let's get started. The American market's Wednesday rally was short-lived. On Thursday, U.S. stock markets took a sharp U-turn, giving back much of their historic gains after President Trump's temporary tariff reprieve sparked brief optimism. The S&P 500 plunged 3.46%. The Dow fell 1,014 points and the Nasdaq dropped 4.31%, led by a tech sector rout. Tesla tanked 8%, Meta and Nvidia slid 7%, and Apple lost over 4%. What spooked the markets? A White House clarification confirmed that tariffs on Chinese imports would spike to 145% and not 125% as mentioned earlier. That shocker sent major indexes into session lows. The Dow at one point dropped over 2,100 points. Even a relatively tame inflation report couldn't lift the mood. Investors brushed it off, seeing it as backward-looking amid growing fears the tariff war could worsen economic conditions ahead. With trade tensions flaring and tech stocks tumbling, Wall Street is on edge. The message from the markets? Relief rallies are fragile, and volatility may be the new normal. Indian investors may wake up to a sparkling market rally today, but don't be fooled by the shine. After President Trump paused new tariffs on most U.S. trade partners, except China, global markets surged. But when the White House clarified that China would face a steep 145% levy, Wall Street crashed, sending a warning to markets worldwide. India was closed on Thursday for Mahavir Jayanti, but the gift Nifty hinted at a strong 600 to 700 point gap up when markets reopen. Still, seasoned investors are waving the caution flag. Don't let the pop cloud your judgment, said Amrish Baliga. If you're overweight equities, book profits. Nilesh Shah of Kotak Mahindra AMC echoed the warning, urging investors to stick to their asset allocation. Volatility is the new norm, he said. While FIIs have hedged against risks, retail traders shorting call options may face heavy losses as prices spike. Add in muted reactions to the RBI's latest rate cut and a shaky global backdrop, and the message is clear: play it smart. As Shankar Sharma put it, too much policy flip-flop, wait for clarity. The rally might be real, but the risks are too. The 90-day tariff pause from President Trump may have calmed some nerves. But for Indian pharma, the pressure is far from over. Despite the breather, a White House release dated 2nd April specifically named pharmaceutical as a focus area for potential levies. That's rattled investors. Since April 2nd, Biocon and Aurobindo have tumbled nearly 10%, while Dr. Reddy's is down 5%. Sun Pharma, thanks to its specialty drug portfolio, is holding relatively steady, down just 3.6%. India supplies half of America's generic drugs, making it highly vulnerable if tariffs go through. If costs can't be passed on, companies might pull out, triggering shortages like we saw during COVID, warned Kotak Institutional Equities. Even if tariffs are imposed, they may not stick. High levies could backfire, raising prices for U.S. patents and risking drug shortages, said Kotak. That's why many believe generics might be spared or see short-lived duties. Meanwhile, building domestic pharma capacity in the US isn't easy. A Nomura report points out making a simple generic in the US is up to 8 times more expensive, and patented drug manufacturing can take years to set up. For now, the 90-day pause offers a breather, but the uncertainty, that's likely to linger much longer. What was meant to be a family vacation turned into a heartbreak over the Hudson River. Agustin Escobar, the president and CEO of Siemens Mobility Southwest Europe, was killed alongside his wife and 3 young children when their helicopter crashed upside down into the river between Manhattan and New Jersey on April 10th. The Bell 206 aircraft went down 3:15 p.m. local time. Photos showed the family of 5 smiling in front of the chopper just before takeoff. Witnesses reported seeing parts of the helicopter, its tail and propeller fall off mid-air, leaving it spinning before slamming into the water. The FAA and NTSB are now investigating. Escobar, 25 years with Siemens, had led infrastructure and energy projects across Europe, the US, and Latin America. He was a pillar in the global tech community and vice president of the German Chamber of Commerce in Spain. For now, The skies over New York carry more than just traffic. They carry grief for a family lost in a split second. Virat Kohli is switching gears, not just in the pitch, but in business too. With his 110 crore rupees 8-year contract with Pharma ending, Kohli is set to become an investor and brand ambassador for Agilitas, a rising Indian sportwear startup founded by former Pharma India MD Abhishek Ganguly. The big reveal expected during the ongoing IPL. At the core of this move is Kohli's ambition to take his lifestyle label 18 global. It's all about building a world-class Indian sportwear brand, said a person familiar with the plans. Agilitas will now manufacture, distribute and scale 18, with fresh branding and expansion plans both in India and overseas. Pharma confirmed the split, calling the partnership wonderful, while wishing Kohli the best. Interestingly, over the past year, he's been spotted wearing neutral shoes without Puma's signature form strip, a common practice when transitioning sponsors. Agilitas, which acquired rights to Italian brand Lotto and shoemaker Mochico, is rapidly building its portfolio. Backed by 530 crore rupees in funding from Convergent Finance and Nexus Ventures, it's aiming to become a homegrown challenger to global giants. Kohli isn't just endorsing, he's building. And this innings is just getting started. That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a fabulous Friday.